Well, oil and gas companies cheered President Trump's election victory last week after he promised to unleash an oil boom in the United States and target President Biden's climate policies. However, our next guest says Trump's win is not necessarily good news for energy investing in oil and gas producers. And joining me now is Stewart Glickman, CFRA Research Energy Equity Analyst and Deputy Research Director. Stewart, it's good to see you. So maybe, Stewart, actually, I'm curious to get your outlook for crude. You know, looking at Brent here, Stewart's just under 72. Where do you think that is kind of near intermediate term here?
Hi, Josh. Thanks for having me. So crude oil wise, yeah, pricing I think is going to be mediocre for 25. We're looking for WTI probably around 65 bucks a barrel, Brent arguably somewhere close to 70. So I think we're kind of in range for what I think is going to happen next year. And yeah, I don't think it's necessarily great news for energy investors. We're already producing record oil production today, and they're, you know, I don't see a huge impetus for lots of, you know, incremental supply growth coming out next year, but non-OPEC supply growth next year is already looking pretty robust. So couple that with a kind of a wobbly demand outlook, and I don't think it's great for pricing.
In terms of upside risk to that call, Stuart, I'm just curious on the demand front. You know, how are you thinking, for example, about all that stimulus in China?
Right. So China has had several incidents now of, you know, extra stimulus they're putting into the economy. It so far has not really placated investors, and I think investors are kind of treating it as a show me story. Like, let's see what the data tell us about Chinese economic growth. And it's been kind of underwhelming the last couple of quarters. So until they kind of break out of that and show that the economy is really on its front foot, I think there's going to be some skepticism there.
And what about, of course, geopolitical tensions, Stuart, in the Middle East? Always possible that escalates. How does that sort of fit into your thesis?
Yeah, so we've been dealing with just a deluge of geopolitical crises, right, for the last, you know, call it 12 months. They haven't really found, I would say, a sustainable path towards much higher oil prices. I think, you know, where the real concern is that if you get into some, you know, direct confrontation with Iran that involves, for example, Israel attacking Iran's oil facilities, that's a different ballgame. So far, when Israel has attacked Iran, it's been really going after their military assets, their missiles, their drones, and so on. So if that were to expand, then I think that does change the picture. Or, for example, if Iran were to pull a move like, you know, start to impede traffic in the Straits of Hormuz, which is a major transit point for lots of crude oil moving around the world, that too, I think, would be very bullish for crude oil. But barring those kind of really significant events, I don't see geopolitics really driving the bus next year.